Welcome to the Real Estate Way to Wealth and Freedom podcast, episode 11.
Welcome to the Real Estate Way to Wealth and Freedom podcast with Jacob Ayers, providing actionable content to help you along your journey to financial freedom through real estate investing. As the premier asset class, real estate has helped ordinary people just like you amass fortunes. The benefits of passive income from real estate investing will allow you to live a life you want. And now your host, entrepreneur, real estate investor, and apartment deal syndicator, Jacob Ayers.
Okay, welcome everybody. Today we have Jeff Greenberg. Jeff is the managing partner of Synergetic Investment Group. Since 2007, Jeff has been investing in multifamily assets in emerging markets. He focuses on acquisitions, investor relationships, contract negotiations, business systems development, business management, and asset management. Jeff has over 40 years' experience in management, staff supervision, development, and training. He has proposed, elemented, and supervised million-dollar budgets for government agencies, as well as private and public organizations. Today I welcome Jeff Greenberg. Jeff, thanks for joining us.
Well, thank you for having me.
Absolutely. So, Jeff, could you tell us a little bit about yourself and how you got started in real estate investing?
Well, I come from a technology background, and I was actually going through a divorce at the time that I decided to get into real estate, when I kind of looked at my assets and realized that I wasn't going to be retiring any day soon. So decided that real estate was the way to go. Tried my hand at some of the different niches in single-family homes. And this was about 2007. And that wasn't a real good time to be getting into single-family homes.
Certainly.
So I happened to go to a conference where I met up with someone that was doing the multifamily, and that kind of excited me. That was a niche that I liked, the extra zeros behind it. I liked the fact that you could do a lot of stuff with limited funds, that you could raise private money, and so I kind of got started that way.
Yeah, great. What multifamily arena are you in? Are you focusing on maybe Class C, Class B multifamily?
Well, mainly we're looking at B and C, but it ends up mostly C for the most part. But I'm also looking at student housing. I currently have two different student housing projects, and that's kind of exciting at this point. So we are looking further into that. Student housing does well during recession times. And so we're putting a lot of focus on that area, along with other areas of multifamily.
Yeah, right. Great. What regions of the country are you focusing on, or do you have a focus? We're looking, somewhat in the South, more southeast. I mean, we're looking right now. We've got a property in Georgia. We're looking at a couple things in South Carolina. I guess we also have something up in Ohio, so I guess that's up in a little bit farther north. But middle of the country, pretty much. Yeah, right. Great. So, Jeff, you kind of started along like many people do, getting started in single-family houses, and then realized you liked the scalability and magnitude of multifamilies. Could you just touch on a couple of the differences in your experience so far?
Well, they are quite a bit of difference, and I even tell people that I don't feel there's enough difference that you need to start out in single family homes. There's just really so much different. I mean, in the multifamily or the bigger property, any of the commercial properties, you're essentially buying a business. So you have to have an understanding of how to run that particular business, either self-storage, multifamily, student housing, mobile home parks. Those are more about understanding the business as opposed to single family homes where your value is more determined by comps, and you don't have a lot of choice on what you can do with the comps, where in commercial it's much more about understanding the business and what you can do to improve the business.
Right, certainly. You definitely have that added layer of flexibility and being able to be creative with, the property or businesses you refer to. So, yeah, great. So, Jeff, could you talk a little bit about your current projects you have going on and maybe share some of those details?
Well, we currently just closed, I guess it was mid-April, on a student housing project. It's a little smaller than I like, but it was such a good deal that we decided we'd go for it. But it's 36 units, and it was 60% physically occupied and 48% economic occupancy. It was a property that was foreclosed on, and it was held by the equity fund that held the note, and so we ended up buying it from them. It's got some fabulous potential to be a real home run deal, because there's so many value adds that we can bring to it, and that's one of the main things that we're looking at right now is value add deals. Something that we can do that can add some great value to the property, increase its value, and then be able to either sell it or refi and pull most of the money out.
Right. Okay. Through your company, Synergetic Investment Group, are you syndicating these multifamily deals?
Yes, all the deals we're doing are syndicated.
Okay. And how about how are you managing them? Are you hiring third-party management companies or self-managing?
Oh, we don't self-manage. No.
Right. Okay.
We always manage. Have a professional management company running it. Trying to manage a property from California to back east just doesn't do it. We love to find people that are trying to do it. In fact, I'm looking at a property right now where an investor was trying to do it. We love getting into those because usually they're a mess, and we could come in and get the property at a good price.
Right. So could you talk a little bit about how you're able to go into a new market and establish relationships with, local management companies and partners there, and how you're making that work?
Well, we get references, and we do a lot of interviews as far as what property management companies are out there, and we get references to find out how they're performing. We've found out the hard way, how important property management is, and that's something you can't take lightly. You have to make sure you're watching what's going on and making sure that your property management is in alignment with your goals. But typically, we start with the property management and the brokers that are bringing the deals, but we put more trust and judgment in the property management. They're going to be the ones that are going to be sticking around. The brokers typically, once you close on the property, are long gone. They've made their commission, so their judgment we're not going to be valuing nearly as high as, say, a property manager when we're looking at the properties.
Right. So you're looking into investing in emerging markets. So are you and your company looking at the market first and then trying to find properties within that market that fit your investment criteria? Or are you looking across multiple markets and then finding a property that does first?
Well, we are looking at multiple markets, and we do want to, look at a market for a reason to be there. There are times that we get properties that are from a market maybe that we haven't looked into, and we'll go ahead and look at the market and decide whether or not we want to go over into that market. So, in fact, that's one of the first questions I asked my team. When they bring a property over, they say, okay, why do I want to be there? What's going on in this market that makes me want to be there? And so I'm okay with opening up into a new market. My biggest concern is getting good property management. So right now in the, I guess it's the Southeast we're in, we have currently working with a property management company that covers a lot of the Southeast. So in a lot of cases, we're asking them if they will cover this area. And we've even had the company going out to some of the properties to check them out for us. And respecting their opinion of it, seeing if they would manage that for us, and relying a lot heavier on the property management company.
Yeah, that's great. It's great that you guys have that strategic partner in the property manager. I'm sure that helps and helps vet markets and sub-markets even. So great.
Absolutely.
So could you talk a little bit about how you've built your team to this point, both external partners, property managers, lenders, and then whatever your team looks like internal to the organization?
Well, as far as the external team, I mean, it depends, on the area. I've already talked about property managers that we contact different property managers and get references. As far as lenders, we have some mortgage brokers that usually are going to go looking for a loan for us. So we have them as a resource to go and look in many different areas. In the past, I have gone directly to an individual bank. It depends on the situation as far as the market. So far, we've been with different lenders every time, depending on the situation. As far as brokers, we've got a variety of brokers that we've met from many different sources, but most of the deals seem to come with brokers when you're dealing with commercial properties. And then as far as lawyers, I have received references from either the property manager or from the brokers for a local, when I say a local lawyer, and I mean within state. That's the main thing on the lawyers is if I'm going to have a lawyer's for my transaction, I want somebody local to the state. I'm not concerned about them being local to the county or the city, but I want to make sure that they know the state laws, and your city and county ordinances typically aren't going to interfere with much. And then as far as the syndication, I have my lawyers that are out in California, and it doesn't matter. We're talking federal law, so it doesn't matter where they are.
Right. Okay. And your investors, can you talk about who those people look like and what those relationships are with those types of people?
Well, those people are all different people. They're people that I've met somewhere along the way. I have met some of them on from different sites that I've been on. I've met a lot of people through Bigger Pockets, different other podcasts that I've been on. I meet a lot of them from the clubs. I run 2 different clubs out in California, real estate clubs. I have investors from those. I have met investors all around different seminars I've gone to. I network with people all the time. I meet investors that way. So I've met them many different ways.
Yeah, great. Thanks, Jeff, for sharing that. I ask because, when people are first getting started out, that seems one of the more daunting tasks is how do I find investors? How do I, find people who are willing to trust me with putting together deals? So just wanted to get a behind-the-scenes look at, how you've done that.
Absolutely. And the thing is my students that are working with me now, as far as looking at deals, one of the things that I'm working on with them is to be able to go out and talk to people, to talk to their friends, to let them know what they're doing. And you never know who's going to want to invest with you. This group that I've been training, they're the ones that found this deal in Georgia that we just recently closed on. And this is an immense amount of credibility for them when they talk to people, and I've told them to use that credibility when they're talking to people, whatever social events they're at, and people ask, "Hey, what's going on?" You can say, "Hey, we just bought a student housing property down in Georgia, and we're very excited about what's going on, and et cetera, et cetera." And hopefully the conversation will turn to, how can I get involved, or let's talk about this. I have some money that's sitting around doing nothing.
Yeah, absolutely. Having the credibility of that first deal, really goes a long way. And after that, it begins to get easier and easier. So, yeah, right. Getting the experience of that first deal. And you kind of started to touch on it, but, you guys have found that thing as a team. So, you get to use the power of we rather than just saying, going to the table saying, I don't have the experience with this, but rather we have this experience or we've done this really carries a lot of weight.
Oh, absolutely. And the amount of credibility that it gets that you're part of the team. I have other, back to what the investors look like. I have many investors that have never done a syndication, and they want to be on, even if they weren't on the management side, they wanted to be at least on the equity partner side just to see what that looked like. And I did that also in the beginning. And I learned what that looked like on the other side. And that taught me a lot of lessons on how to treat my investors on the management side. So it's a good thing to go ahead and do and to learn from it. And so some of the investors are in that mainly for that, to kind of learn what it looks like on that side of it. And also they have the opportunities to ask all the questions they want about the investment, so they can learn as much with the plans for eventually doing their own syndication.
Yeah, great. So circling back to something we said earlier, you talked about when you're analyzing multifamily deals, it's almost like looking at this thing as a business, its own individual business. So how did you get to the point where you can look and confidently do your due diligence on, say, a student family project versus a multifamily project in Georgia? How do you overcome, what you don't know?
Well, that comes from experience. And typically what I tell people, I talk to new people all the time in my different clubs. And, you have to kind of open yourself up and figure out what niche is of interest to you. And not everybody is going to go, the same direction. There's so many different directions you can go and places you can make money in real estate. And just listening to these different podcasts, you can see all the different directions people have gone. But once you've kind of got an idea of what direction you want to go, then you've got to go and find, okay, who's an expert either in my area or maybe even out of my area, somebody that I feel I would like to learn from. And you go find out what you can do to help that person. How can I help you? Can I make phone calls? Can I lick stamps? Can I, feed your dog, walk your, whatever. How can I help you to free up time, so you're going to be more inclined to talk to me?
Yeah.
Because, people like myself are busy. So to ask someone come up and ask me to be their mentor, that's kind of the wrong way of approaching it. I believe very strongly in the internship, apprentice type of thing, where somebody volunteers their time and learns the ropes that way and gives back without the expectation of anything in return. And typically there's going to be a lot given back in return, but you go in, not with that expectation, but you go in and say, look, how can I help you? And you learn that way. Also, once you get into a deal, if you're able to get into the deal with that person, just helping out, you can add that to the credibility. Even though you weren't the managing partner, you can tell people, say, look, we just did this deal together. I worked with with this guy that's got a lot of experience, and I did this deal. And, you do a couple like that, you get more and more experience. Because, as you said, you don't know what you don't know. And what you don't know can very well hurt you.
Yeah, right. That's great advice, Jeff. I've actually done some of those things you're saying. Reaching out, first off, identifying who is out there doing what you want to do. Reaching out to that person and seeing how you can help them out, add value. I've come across investors who are doing deals in my area and, hey, let me drive by, look at the deal, send you pictures, help you out, send you references, give you the scoop on this area, things like that. So absolutely, I think providing value and, trying to help give back, like you said, is a great tip.
Mm-hmm.
Okay, Jeff, so what are your future goals with Synergetic Investment Group?
Well, we're still in our expansion mode. We still want to continue to acquire properties. I'm real happy with the student housing, but I wouldn't mind looking into some more in the way of senior housing, senior living, assisted living. Now, on some of those where you're talking about the assisted living, we wouldn't be the operators on those, but I wouldn't mind having properties that to lease out to operators. But senior type of housing is going to just continue to increase as my generation continues to get older and older. There's going to be a lot of demand, and there certainly isn't enough facilities for people that are going to need help as they get older. And we keep getting older and living longer. And so, certainly senior housing is a way to go.
Yeah, the demographics behind that I certainly find interesting. In an aging society like that, you have to start looking at what other asset classes are going to be in demand in, say, 10 or 20 years down the road. So, yeah, great foresight. So with your investments through Synergetic, are you guys typically buying and holding those just in a short term, say 3 to 5 years as typical, or are you holding on to those longer?
It depends on the deal, and it depends on the market, and it depends on where it is on the cycle. An example, the first property we had, it was a 20 units. It actually was 5 fourplexes. It was in a very slow growth market. And this was a big lesson for us. It was 100% occupied. It was 3-year-old property, so it was practically brand new. There wasn't any value adds that we could do except for raising rents and billing back utilities. And the billing back utilities met with quite a bit of resistance, and the raising the rents just wasn't going to happen. And so on that particular property, we were supposed to do a 5-year hold. And at year 4.5, we started to try to sell it at a price that we thought would bring us a decent return for our investors. And we didn't get that sold until year 6 because we needed to get that price because there wasn't that much value added to that property that we were going to be able to get a decent return for the investors. So we hung on to it for an extra year. So that's one extreme. This year I sold my property in Houston. It was 62 units that we had bought 3 years earlier. It was supposed to be a 5-year hold, but my broker approached me and said, "Hey, I could sell this for." We had bought it for 1.3, and he said, "Oh, I can sell this for 2.2." And I said, "Well, I don't want 2.2, even though 2.3 is what I told our investors we would sell it for in year 5. He said, "I can get you 2.2 right now."
Yeah.
And I said, "Well, my prepayment penalty is too high." So I didn't want to do that. And then I decided, okay, I'll go and take a look and realize my prepayment penalty was only $100,000, which seems like a lot of money. So I told him, I said, "Look, if you go and list it for, well, actually, before that, I talked to my property manager, and she said, "Oh yeah, you should be able to get between 2.9 and 3.2 for this property." And we thought, wow, if we can get that kind of money, it certainly would be worth it. So I told him to list it at 2.9, and we actually ended up selling it for 2.7. Okay, so that was in 3 years. So because the opportunity was there, because we had added value to it, and the market had added value to it by lowering the cap rates, we only held it for 3 years. Mainly because I was able to get my investors, a better return than I had told them in the beginning on a 5-year hold, that I was able to give it to them in a 3-year hold. And so because of that, we sold. But typically on a pretty stabilized property, I would go with a 5, 7, or 10-year hold. But on a value add play, where you're increasing the value by quite a bit, that might only be a 3-year hold. It's going to depend on what's going on with the deal, because the thing is, if you add value to it in the first 3 years, all you're going to do is dilute the returns in the next 2 years, because you're not going to be adding as much value. So your annual return is actually being reduced if I held on to it for another couple of years. So you're better off just getting out in the 3 years and having a lot of happy investors and going on to the next deal.
Right, great. So you've talked about being in the expansion phase still. Where are you trying to expand to?
Well, we're looking at a lot of different markets. As I said, South Carolina, we're looking for still some more in Georgia. I wouldn't mind having some more in the Ohio area. I've got one of my people lives out in the Oklahoma area, and so he's looking out there. There's a few different areas. There's some areas in Florida we're looking. I wouldn't mind getting back into Texas. I'm completely out of Texas right now. I like Houston. Except Houston's a tight market. That's why we sold, because I was able to get such a good price. But if I found something distressed in Houston in a decent neighborhood, I would go back in there. So we're looking at a few different areas.
Great. So Jeff, you guys are expanding. You're moving along pretty well. What are your reasons why? Why are you doing what you're doing?
If you're talking about my personal why?
Yes.
My personal why is something, I mentioned it in the beginning, that I had gone through a divorce and realized that with my ex taking the house, that the retirement funds were not going to be sufficient to sustain me. And not only that, I wanted to be an asset to my children in my later years and not to be a burden on them. I also have 5 grandchildren, and I would love to do things with my grandchildren as far as traveling and taking them different places and showing them things. And it wasn't going to happen if I continued on the path that I was going, which was basically a high-paying career, but it still wasn't going to do it. So I figured that this was the only way that I was going to be able to do it, is if I had this additional income from real estate.
Yeah, great.
Just want to point out that you're bringing up the why, and that's an extremely, extremely important concept that people have to understand. And I can't emphasize it enough that there's many, many times that you're sitting there thinking to yourself, why the heck am I doing this? I think that a lot of times your on-stage gurus do a disservice to people when they tell them it's easy to do, that anybody can do it. I do believe anybody could do it, but it's not easy. And I think when people set their expectations that this is going to be easy, I'm going to be able to do it just like all these other people did it. And then they hit a few bumps in the road, all of a sudden they're gone. You need to hang on to that why and have a strong reason to keep on pushing when you want to do all these other things like everybody else is doing. And instead you're stuck behind a computer or on the phone calling people or doing all this other stuff. When you really would have rather be, out at the beach or at the park or watching TV or whatever it is. So yeah, you need something to kick you in the butt that, when you start getting down and thinking that this isn't going to work for you. And if I could, I'd like to just relate a little story. There was a gentleman called me for one of my club meetings, and he lives probably about 10, 15 miles from where the club was. And he called me up and he said, "Oh, do you ever have any club meetings out where I live?" And I said, no, this is where we have it. I mean, it's 15 miles away. It's 10 minutes away from where he is, 15 minutes, something like that. And he said, "Well, that's really too far for me to go to get to the meeting." And I chewed his butt out. I mean, I told him that if you can't manage to drive 15 miles to go to a club meeting, then don't bother to get into real estate. Do not even start. Do not even try, because you're just going to totally fail. You have to, if you don't put out, if you don't attempt to put yourself in uncomfortable situations and drive out somewhere when you don't want to really be there, forget it. It's just not going to happen. All the times I've driven for 3 hours in traffic to get to a meeting or get to some event where I would much rather be sitting home doing nothing. That's what it takes to be successful in this business.
Yeah, absolutely. Or for that matter, flying across the country to, inspect a new property, or, this is not an easy game. And I think people have a misconception of real estate investors as just laying on the beach and cashing rent checks. And at least in my experience, it's a lot of work and it's a constant hustle. And if you don't have a reason why to keep you going, then, you hit those hard points and you may not continue. So I think you're right by having a powerful reason why.
Absolutely.
All right, great stuff, Jeff. That's really awesome and important. So wrapping up, we've got a lightning round. We've just got a series of questions that we'll fire at you, and you just kind of shoot from the hip. So sound good?
Sure.
Okay, let's get started then. First question is, what was your biggest hurdle getting started in real estate investing, and how did you overcome it?
Well, the biggest thing was just the fear factor of, just the extra zeros behind all the numbers, and the fear of losing my own money as well as losing somebody else's money was very difficult. The way I got over it, a lot of it, I guess, was I had a partner that I was working with who was very analytic, very detail-oriented. And so we passed things back and forth between each other and helped each other past our own fears, as far as if we figured if we both agreed on things, then we're probably pretty safe. But we also had mentors. We both had mentors that we were able to go back and ask them questions and about different situations. So I guess having somebody with experience to bounce things off of is a great resource. And as I mentioned, Bigger Pockets being a great resource for doing that kind of stuff as well. Asking somebody else. When I first started, I didn't know about Bigger Pockets, but it's a great resource.
Yeah, absolutely it is. Yeah, it's great to have that sounding board, whether that's a partner or a mentor or just a peer in your local investment group. And by surrounding yourself with those types of people, you can help, overcome those fears, although I feel like they're always out there. So.
Oh, absolutely. And the thing is you push yourself, you push your fears. And I've always done, I've always had a fear as far as speaking in front of groups. And then, now I'm speaking in front of groups all the time. It's just, you push, what's nice about pushing yourself into your comfort zone. Once you get past it, then you can move on to the next step. You've now grown. And so you've gone past that, and now you can move on to the next thing.
Yeah, right. Okay, great. Jeff, do you have a personal habit that contributes to your success?
Determination.
Good one.
I don't know if that's a habit, but that keeps me going. I'm determined. I don't quit easily. So that's the drive has kept me going.
Yeah, right. Okay. Do you have an online resource that you find valuable? I suspect what you might say here.
Well, there's a lot of podcasts. Obviously, Bigger Pockets is one of them. But there's a lot of things. Right now with my group, we've been using the program called Slack, which has been our communication resource for a while. So that's kind of an online resource. Those mainly I guess the big thing is the podcast. I'm always having my team listen to podcasts, read blogs, webcasts, and Zoom is a great resource for me. A lot of times my team can't get together, and so we get together on Zoom and use that to share information and talk. And I do a lot of training on Zoom.
Right, great. Okay. We'll put those links and references in the show notes. What book would you recommend to the listeners and why?
To narrow it down to one book is rather difficult, but there's a lot of different books out there.
Give us a couple if you'd like.
Yeah, I think, it depends on what stage they're in, but obviously, Rich Dad, Poor Dad, gives you the paradigm shift, as far as a lot of people moving out from the W-2 job, gives you another way of thinking, as well as his quadrant?
Cash flow quadrant.
Cash flow quadrant. Yeah, those are very enlightening. I also like the E-Myth, because my big thing is to develop systems, to develop ways to pull yourself out of a lot of the day-to-day work and get other people to be doing a lot of the work that you don't need to do, and create systems to do that, working on your business as opposed to in your business. So that's a great book, as far as just overall, business books.
Yeah, great. Those are all fantastic books. So we'll link those in the show notes for the audience. All right, and last question. If you were to give advice to your 20-year-old self to get started in real estate investing, what would it be?
Well, I think I've already answered this one, but it's find someone that's doing what you want to do, and find a way of helping them, find a way of being assistance to them, to learn from them. And in fact, I had one of my interns was a 19-year-old that worked with me for a while. He was the one that actually found my Ohio property when we purchased that. But again, it's find someone that's doing what you want to do, and I don't care if this is real estate or anything else, any other kind of business. Find someone that's doing it, and then find a way of being a service to them, and learn from them that way.
Yeah, great advice. All right, Jeff. Well, wrapping up here, what's the best way our audience can connect with you?
Well, the best way you can get to my website, which is synergetic.ig.com, synergetic.ig.com, or you can email me at jeff@synergetic.ig.com. You could also get a hold of me through Bigger Pockets. I'm on there quite a bit these days. Any of those will work.
All right, Jeff. Well, we certainly appreciate your time today. I think it was a fantastic interview and a lot of great advice. So we'll put your contact information in the show notes for if anybody wants to reach out to you and follow up with any questions they might have. So,
well, thank you very much for having me, and I look forward to hearing this and hearing some of the other podcasts that you're going to be doing.
Yes, absolutely.
Sounds great.
All right. Thank you, Jeff.
Thank you.
All right. That wraps up our episode today with Jeff Greenberg. I hope you're getting value out of this show. If you like what you've heard so far, I invite you to let me know by leaving a rating and review. Please subscribe to the show to be notified of future episodes. As always, if you have any questions or comments, feel free to contact me at www.jacobayers.com or email me at info@jacobayers.com. Until next time, signing off, I'm your host, Jacob Ayers.
You've been listening to the Real Estate Way to Wealth and Freedom podcast, providing you actionable content to build your real estate empire. Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for personal advice. The opinions of guests are their own. Information is not guaranteed. All investment strategies have a potential for profit or loss. The host is operating on behalf of the Real Estate Way to Wealth and Freedom, LLC, exclusively.